Okay, so what's up, traders? All right, so this is Rayner here from tradingwithrayner.com, and in today's webinar, I just want to walk you through what I think is going on in the financial markets right now. Right, we'll be looking at the major currency pairs, the equity markets, and the bond market. So these are basically the three different sectors that I'll be covering today. So first up, right, this is the FX markets. Okay, so you can see that this is basically the chart of the euro dollar, the daily time frame. So what you're seeing here on this chart are basically the support resistance levels that I've actually plotted, right? So this is the 1125, this is the 10825, right? And this one over here is basically 10525. So the red one represents the weekly support resistance level, the black one represents the daily support resistance level. So what you're seeing here is euro dollar. At this point in time, it's not looking too pretty, right? If we go up and see the big picture, you can see that this market is pretty much in a range, and it had a false breakout, right, sometime in November, right? Price traded lower, right? And then it closed back into the range. So basically, traders who got short, right, are trapped, or probably got their stops, triggered. So the market trade back into the range, and right now it's retesting this area of resistance that you can see over here, right? So to me, my bias is still towards the downside, right? If you go down to the daily time frame, right, how I derive my bias is very simple, right? I try not to complicate things, right? I just use a moving average, right? A simple tool like a moving average, right, and trade alongside it. So what I like to do is use the 200 period moving average. You can use exponential, you can use simple. Doesn't really make much of a difference. I like to use exponential because it's more responsive. Then you click OK. So at this point in time, price is clearly below the 200 period moving average. So at this point in time, I'm looking to short, right? So you can see that there's actually a potential trading setup at this point in time, right? You notice that this is the area of resistance, right? Previous support, then resistance, resistance, resistance. On top of it, we have a confluence of the 200 period moving average, which is this black line over here. Okay, so number one, let's try and keep this simple, right? Number one, we have the trend. Number two, we have the area of value, which is actually the area of resistance. Hey, how about number three? The third thing that I'll look for is an entry trigger, right? So this basically is some sort of can be in the form of candlestick pattern to confirm your initial bias, which is towards the downside. So I got this in the form of a engulfing pattern, a bearish engulfing, right? Not all traders would agree that this is a definition of an engulfing pattern, but the way I define it is that as long as the candle, right, covers the body of the previous candle and closes below the low of the previous candle, right, that to me is my definition of an engulfing pattern. So number three, right, we can put this down. Three, your entry trigger, or this trigger, right, say engulfing. Right. So what I have these three criteria, to me, it's a valid setup to go short. Okay. And where I'll put my stop loss is this, right? I put my stop loss again, right? It's quite different from how other traders would usually put it. I think most of them would, put this above the highs. But based, in my years of trading, right, putting above the highs, it's very easy for, the market to spike through the highs and then collapse lower, right? So I don't like to put my stop loss just above the highs. What I like to do is to put my stop loss away from the highs, right? Give it some buffer. So the way I do it is using an indicator called the average true range. I like to use 20 period because in a month, right, there are 20 trading days, right? So click OK and find out what is the value. The current value of the ATR is about 74, 75 pips. Let's make it simple, 75 pips. So what I'll do is I'll take the high of this candle, okay, and plus another 75 pips. So it's quite simple, right? Let's say I'm going short at this candle open, which is this green line over here, right? Just to walk you through. One thing to bear in mind is that I'm not a financial advisor. Whatever I shared down here, whatever I'm sharing down here is for educational purposes only, right? Whether you make money, you lose money, right? I will not be responsible for your losses, right? You will be responsible for your losses. If you can't agree to this, then I suggest you stop watching this video and find something that is more suited for your needs. Okay, so that's a disclaimer down there, right? So assuming I'm going short at this candle's open, right? This candle open somewhere here today. Right, stop loss again, right? I repeat, right, 180 are above these highs. So let's say our stop loss is in red color, right, to signify the stop loss. So the high of this candle is say 10906. So I plus 75 pips will give me 10981. Right, so this you change to 981. So you can see over here, right? Green is my entry, red is my stop loss. Right, so I'm looking to short this market. Right, what's the reason for it? Right, we are trading with the trend at an area of value. Right, and we have the entry trigger, which is the engulfing pattern. Right, and on top of it, I like the fact that this market has triggered above these highs and these highs over here. Why is this a good thing, right? To me, this is a plus point because there will be traders looking to long the break of these highs. The breakout traders, right? You say, hey, look, right, the market is rallying above the highs, right? Let's go long. Right? So if you go long, what happens? And the market reverse, right? You're now trapped, right? You're in the red right now because the market has, reversed now towards the a close below the resistance. So this group of traders who long the breakout are now trapped. So as price, were to trade lower, this group of traders would, end up cutting their loss, which will fuel further selling pressure, right? So this is the setup, right? I'm trading against the traders who are now trapped from trading the breakout, right? And another thing that is a plus point is, the confluence of this 200 period moving average, right? When you use the exponential or the simple, you can see that it's pretty much in line with it. Okay, so this is the simple and this is the exponential, right? What about targets, right? You know your entry, you know your stop loss, you know the reason why you're entering this trade. So if you're trading off the daily time frame, right, really a question of exits really depends on what are you trying to achieve from this trade. If you are, let's say, you are trying to take a swing out of this trade, if you ask me, right, I would say this over here is a potential, level that you can look to take your profits. All right, let's change this to magenta. All right, so why this level, right? Because if you ask me, right, this is let's see, right, let me look. I would say this level, yeah, somewhere around 162, right? 162. And because if you think about this is actually a potential previous resistance that could act as support, right? This is an area where potential buying pressure could come in, right? So if you ask me, this is a potential level that you may want to take your profits or take partial profits there, depending how you manage the trade. Okay, and maybe if you want to go for a second target, it could be this red line over here, which is a weekly level, right? So this is basically euro dollar, right? On why I'm looking to short this market. Okay, so let's move on, right? Next one, let's look at pound dollar. So pound dollar again, right? Similar to euro dollar, right? The trend is bearish, right? You can see price is below the 200 period moving average. This is the area of resistance that I've marked out, right? But I'm not looking to trade this because, right, again, it's not at a level that I want to do business from, right? When I trade, right, I look at the trend, I look at the area of value, whether it's at, an area of value. So if you ask me the pound dollar, is it at an area of value, which I've marked it out as the 127 level. So I'm not looking to take this trade at all. Okay, so this is important, right? You really want to know, your levels ahead of time, right? So you know where to trade, when to trade, and how to trade. Okay, so let's move on, right? Aussie dollar. So you can see again, right? Aussie dollar, this time around, its price is above the 200 period moving average, right? So I'm looking to long. The next question is price at an area of value, right? No, it isn't, right? So there is no trading setup for me, right? So the 200 MA simply act as a filter, to trade with the trend, right? You don't have to use this, right? Because, for example, you see over here on this Aussie dollar, price has, retested this area of resistance, but it's above the 200 MA, right? So do you still short, right? I leave this to you. But for me personally, if I want to, solely trade with the trend, I won't short this market. But I know of traders who are comfortable just shorting and take a swing down lower. It's perfectly fine. So as I said, right, trading, there's really a lot of nuances, idiosyncrasies that, you got to manage accordingly, right? It is quite impossible to just, copy traders, identically because, it doesn't work this way. Okay, so for Aussie dollars, I've mentioned, right, this, if you ask me, is an area of value, right, the 75 level, right? So if price can come into this area, right, it would be a potential long opportunity. New Zealand dollar, right, at this point in time, price is basically is still, chopping up and down, right? It basically broke out of this area over here, right? Retested this low, so right, they close higher. So at this point in time, since price is still below the 200 MA, right, I'm looking to short, right? But there is no, setup at this point in time, right? So yeah, but at least you know what New Zealand dollar is doing, right? If you look at the weekly, pretty much right, being supported by this level of a support on the weekly time frame. Okay, so the daily, right? You can see that price is just still consolidating, right? Whether they go up or down, right? It's pretty much anyone's guess. Dollar Canadian, right? Price is above the 200 MA, right? I have a bullish bias, right? You look at the weekly, still pretty much in a range. So again, right, I want to wait for price to come to an area of value. So if it does, approach back, perhaps towards this area of support, there could be a potential, opportunity to go long, right? Dollar yen, if you look at dollar yen daily, it has broken down below this area of support. Okay, so again, right, looking to trade this, right? Right now he's trading at the 200 period moving average, right? So you can see that by right you should be staying short since price is it closed below it, right? But if you close above it, you can look to get long. So what a potential setup I envision right now is that this is the area of support over here. I believe there are traders who would trade the breakout towards the downside, the break of these lows. Okay, so you're probably in the money now if you trade the breakout. But what if, right? If you think about this, what if the market closes higher back above into this area of resistance, right? Those group of traders who went short on the breakout would be trapped, right? So I want to trade against traders who are trapped, right? So if that happens, you can be sure I'll be looking to go long if the market can close back above resistance, right? Profiting from this group of trapped traders. Again, I like to use a stop loss of 1 ATR. Potential targets could be at possibly this highs over here, right? As a swing target. Okay, so let's look at one or two more forex market pairs before we move on. Aussie yen, right? You can see over here, right? We have a trend, right? Price is above the 200 MA, right? This is your area of support. You have a bullish engulfing pattern where price close higher, right? So this is a valid long setup for those of you who trade bullish engulfing, right? Although it didn't retest below the lows of here and here, right? Even though I would like to see that it didn't happen, right? But for those of you who use candlestick pattern as your entry trigger, this could be a valid trading setup for you, right? You could go long at the open, say somewhere here, green, okay? Stop loss 1 ATR below this low, right? I like to use 1 ATR below this low, right? If you don't want to use 1 ATR, you want to use 0.5 or you want to just put it below the low, right? It's up to you, right? So let's say this time around we use 1 ATR, let's say somewhere here, okay? So this is a potential long setup on the Aussie yen. Possible targets is at this highs over here. This one, okay? So again, I won't try to have my targets, right at the absolute high over here. Why is that? Because you have to understand that, support resistance, they are an area on your charts, right? It does not mean that price has to, gun through the extreme ends of your resistance before trading lower, right? Because what could possibly happen, it goes up, but not high enough, and then it collapses lower. So you want to be conservative with your target, right? At a level where, there's a good chance of the market reaching. So if you ask me, right, be conservative a little, right? Put it down, I would say somewhere here, the 87 level, right, will be pretty conservative for your targets. Okay, and last but not least, let's cover one more. Right, it's not a major currency pair; it's an exotic exotic pair. I think it's more of a cross, right? Pound Aussie, right? Another one you can see. Right, this is again a beautiful setup, right? Price you can see came. Okay, first let's talk about the trend. Right, downtrend, right? Because the market is below the 200 period moving average. Second thing, area of value, right? The market came into this area of value. Third thing, entry trigger. Some traders call this a tweezer top, a bearish engulfing, whatever, it doesn't matter, right? The fact that it traded above the high and it closed lower is telling you that price got rejected, right? So you can go short over here, right? Again, stop loss 1 ATR above the highs. Possible targets, right? Somewhere at this weekly support. I would say here to be more conservative. Okay. So from a risk to reward standpoint, this one may not be very attractive because of the large size of the candle, right? But you have to understand that risk to reward isn't a complete picture without taking into account the hit rate, your winning rate. Because you can have, say, a 1 to 0.8 risk to reward. But if you win 70% of the time, it is still going to be a profitable strategy in the long run. So don't just look at risk to reward from an isolation perspective, right? Combine it with your win rate and you'll know whether you have a positive expectancy in the long run. Okay, so this is all I have for you in the forex markets. Let's have a look at let's see. Okay, I'm getting another charting platform to show you the other markets. Okay. So this is tradingview.com, right? I'm not affiliated with them, but they provide pretty decent charts, right? And it's easy to use. So first and foremost, let's look at the S&P 500, right? It's called the ES, right? ES futures, S&P 500. Okay. So again, right? I'm going to apply the same technique, right? I like to trade with the trend. So I like to use the 200 period moving average. So we can just use this as the only indicator on the chart. Okay, 200 period. Black. Okay. So there you have it, right? The S&P 500. What's it doing right now? Right? It's above the 200 period moving average, right? Next thing we want to do is to identify the areas of value, right? So we plot, our support and resistance, right? So how I go about plotting support resistance is like I want to get as many touches as possible on the levels, right? The more touches there is, the more significant the level is. So I'm going to draw them right now, and you can see. So these are, if you ask me, these are the key levels that you want to pay attention to, right? Look at this, right? 1 touch, 2, 3, right? Price break above it, retest, 4. 1, 2, 3, 3 touches over here. Okay. So if you ask me, right, I would expect for a place to go long, right? Possibly the market can pull back towards this area of support, right? Looking for a long setup to go long, right? So this is for the S&P 500. At this point in time, I'm not looking to short, right? I know, the market is trading at such high levels, right? A lot of traders will be thinking, right? Is this a good time to short? A reversal is coming. But if you think about this, right, if the market is trading at, all-time highs, it's telling you that there is more buying pressure than selling pressure, right? So you want to trade along the path of least resistance. So why do you want to short, right? Instead, look for long trading opportunities. I would say that is a much more profitable way to trade, right? Have a look at NASDAQ. NASDAQ, right? How about this? Oops, nothing here. Sometimes you got to pick the right one. How about this one? Nothing as well. Perhaps this one. Yep, this looks fine. Same thing, right? It's bullish, right? In fact, it's even more bullish than the S&P 500 because you see the fact that NASDAQ is much closer towards these highs over here. All right, and the trend is still up. Price is above the 200 MA, right? Plotting your support resistance level, right? This would be a level to look for, right? There are smaller levels along the way, as you can see, right? This over here and this over here. Okay, so this is what is happening right now on the NASDAQ, right? A pullback, a good pullback to flush out all the weak long holders into one of this area of support will be a good opportunity to go long, right? Especially if you have your valid entry trigger to go with, all right? So basically, I would say, generally, right, most of the global stock markets are all bullish in an uptrend. The only difference between them is, how bullish they are. Some is definitely more bullish than the rest, right? So if you just look through all the charts, right? For example, in my opinion, NASDAQ is one of the stronger ones because, right, it is still, trading near the highs. If you look at, let's say, the Nikkei, right? How about Nikkei? Somewhere closer to Asia, right? It is, right, you can see that's pretty much in the range for quite a while, right? Again, still in an uptrend because it's still above the 200 MA, right? You can plot your area of support resistance. Okay, Nikkei. So again, right, if the market can, come back to this area of support, it could be a potential long setup. Or for those of you who trade breakouts, right, if it comes back towards the high of resistance, right, it forms a build up. What is a build up? A build up is basically what I refer to as a consolidation, right? Because it's a fact that, the longer a market consolidates, the harder it breaks. So if it comes to resistance, right, it consolidates for a while and then break out higher, that could be a potential, breakout trade that you can take, right? So this is for the Nikkei 225, right? So you can see that, generally, right, the stock markets are bullish, but the different markets have, different, strength to their bullishness. Okay, so that's for the stock markets, right? Let's have a look at the bond market. It's actually quite interesting right now. All right, let's look at the 10-year treasury. Okay, how about this? So as you know, right, interest rates has been very low since what 06, 07, the crisis period. Right? So you can actually look at the higher time frame. Let's look at the weekly time frame. You can see that it's pretty much in the bull market, right? Looking back. Right? This is because of periods of low interest rates. So this is why you see, since 07, right? The treasury, the bond markets has been in a rally because low interest rate usually typically result in higher bond prices. So what happened now is that that interest rate is slowly creeping up higher. So when interest rate rise, right, it is bearish for bonds, and you can see this also based on the structure of the markets. Right, I think the 5-year one is looking more attractive. So let me share with you the 5-year. They're all correlated, but the degree to the correlation is all based on the expectations of interest rate, whether the closer interest, the near-term bond interest rate will raise higher compared to the longer-term bond like the 30-year. So all these are basically expectations of the market. Right, there are different theories to why long-term bond and short-term bond have different prices, right? But I'm not interested in the theory, right? I am a technical trader. I trade price. So if you look at the 5-year bond, right, basically you can see that it has been a range for a long period of time, right? We have this bullish market, then it go into a range, right, for a long period of time. Okay, what is interesting right now is that the market has broke below this key area of support, right? Look at this. Right, this is a key area of support, definitely, right? Tested once, twice, 3, 4, 5, 6, very important level. If you go down to the daily time frame, you can see that there is opportunities to just short this market, right? Price, say for example, you miss this move, you miss this move. Over here is a trade to go short, right? Price retested this area of resistance. What do you have, right? A bearish engulfing pattern to confirm the market is possibly to head lower, right? You have what? You miss this, there's another one over here. Retested this high. So you can see that this market, or rather generally in trading, the market like to retest the highs and lows to flush out all this stop loss. This is why I don't put my stop loss above the highs. Look at this. If you go short and your stop loss is above this high, you get triggered over here. If you go short and you put your stop loss above this high, you get triggered over here. So can you see now why I don't put my stop loss just above the highs? Because it gets triggered very easily. Okay? So anyway, right, bias on this 5-year bond is towards the downside. As you can see earlier, it broke below the key area of support. Okay, so right now you can see that this is possibly according to this chart, right, it could be a previous support that could act as resistance, but price right now is still above this level, right? So I don't want to go short yet because this could act as a area where bulls would come in to push price higher. But if price were to close below this level, that could be a shorting opportunity. Alternatively, if price can retrace further back towards this area of resistance, all the better, because you got even a higher level to short from. Okay, so this is what I see on the bond markets right now, the opportunity that exists, right? I'm bearish on bonds, plus, given the fact that, interest rates are rising, this kind of like, make the team, sweeter. All right. So yeah, I hope this gives you an overview of what's going on right now in the financial markets. Right, we covered the forex. Right, so let's briefly talk about what we covered. We covered about the forex market, right? Euro dollar, pound dollar, Aussie dollar, the major currency pairs. I mentioned that the euro dollar, Aussie yen, and the pound Aussie, right? There is a potential trading setups right now to actually trade it. Right. Then we talk about the global stock markets, right? I am bullish on them, as I've shared, right? You want to wait for a pullback towards, level of support to go long, or you can trade a breakout if there is a build up of these markets, right? The degree of bullishness varies from, individual equity markets from one to another. But if you ask me, I would say the US is the strongest by far, followed by the European, and Asia is the least strongest, right? And finally, we talk about the bond markets, right? I say that, I'm bearish on the bond and, looking to short if there is opportunity in the bond markets, right? If you ask me between the 5-year, 10-year, 50-year bond, I would say the 5-year is more attractive, right? Because it's looking to be one of the weakest among the other bond markets that I've mentioned earlier. Okay, so yep, that's all I have in today's webinar. If you have enjoyed my work, right, you can feel free to head down to tradingwithrayner.com. This is my website, right? And if you want to learn more about my trading approach, you can download this one over here, the Ultimate Trend Following Guide. You just click download the guide, right? Put in your email, and I'll send the guide to you. Or you want to learn more about price action trading, just click this, right? Put in the email, and I'll just send the guide to your email address, right? It's absolutely free, right? So feel free to explore, and I hope you find value in what I've done. Okay, so with that, right, I've come to the end of this video, right, this webinar, right, and I'll see you next time.